Thank you for having me here. And here's what I remember from who was here last time I came and did this little presentation training?
It's been a long time.
Yeah, it's been a few years. I'm glad you guys are all still here. Here's what I remember most. You guys are smart. Like I was talking to bankers, it seemed like last time. Like we were talking equity and LTVs and debt to income ratios, and you guys were smart like bankers. So this training it'll be less intense because you know your stuff. So I just got like some flyer handouts that'll kind of just give you a breakdown of the 4 major products we do with you guys. Mostly the top 2 is what we do, our 15-month no interest credit card and our home equity line. But there's a bottom 2 products on this that some of you may or may not know about, but I've been able to help a lot of clients with them. So before we jump into this and go into some details, I want to give somebody a $25 gift card. So Brian Post, you've done the most deals with me in the last few years. I appreciate that a lot.
Cool.
You've done the most deals with me of these guys, and I appreciate it. You like Red Lobster, Amazon, or Olive Garden?
I'll do Amazon.
Can't go wrong.
Amazon.
Yeah.
Except for the only problem is it goes to your wife usually.
Yeah, I know. Right.
And Casey, you've done the second most deals with me.
All right,
You like Red Lobster or Olive Garden?
Red Lobster.
Red Lobster.
I haven't done good years.
Take your wife to Red Lobster.
Thank you, appreciate it.
And Kay, thanks for letting me come.
Anytime.
You get Olive Garden.
Sounds good. Thank you.
All right, let's jump into.
You can come next week too.
So yeah, I do appreciate the business you guys have given me over 3 years. I know 3 years ago when I came and did this presentation, it overwhelmed me with business for a few months. It was great, and I hope I kept up good enough. And then I know some of you have kept sending me business over the years, and it's been great. I'm hoping today we can go over a little bit more of what I can do better to better serve your clients, and then and hopefully get more business for you guys to get more sales and make more money. So let's just go over briefly some of this, and you guys can ask questions. You guys are smart. I know that, Brian, you've sent me a ton of the 15-month no-interest credit card. Even people that are rich enough to afford it with their checking account. Some of these people are still calling me and saying, hey, you got 15 months no interest, I'll take it, even though I got 47 grand sitting in checking. So what are you doing to talk those people into free financing?
Really, I just kind of present the option. I say, hey, look, are you in a position to pay off the system within 15 months? If so, this is a great solution, or at least to float the tax credits. So a lot of people like that idea because they don't like to pay any interest. So
yeah, I've been impressed with the deals you send me. There have been, people that are just loaded, and they're calling me for financing when they're doing financing. So whatever you're doing, it's working.
right,
And
that's what I did with my house.
yeah,
Solar on my house. So
Because you're loaded.
because he sells a lot of solar
That's
panels.
right.
Yeah, thank you, Brian. Appreciate that. So does anybody have any questions on the details of our 15-month no interest credit card?
I do.
Sure.
What's the process like for the customer? How long does that take?
Great.
What are they doing?
Great, let's go over. So on the second page of what I've given you, I've decided to give you, this is my application that we can fill out. It's for either a home equity line, a home equity loan, or a credit card. And so this is something like if they were ready and needed financing, you could hand them this and say, hey, fill this out and give it back to me, and I'll get it to Jason at KeyBank and he'll start working on it. Now, if it's just a credit card they need, they can have it approved in an hour. Credit card's my quickest, easiest product to be approved in an hour. One thing that slows us down lately is I have to get signatures from the client. And so on the third page is what I've included for you is my credit card application where they can actually sign it. They can sign this and send it to me. They don't even need signatures anymore. You guys can have them fill this out, give it to me, and then I can get working on it, have them approved in an hour and say, hey, they're approved for 20 grand, move forward, and I've already got their signature if you've given me this. So I'm hoping we can streamline some stuff today by a few extra paperwork. Brian, the way you guys have always done it is you just had them call me.
Yeah.
You just said, hey, here's Jason's number, call them, they call me. On the credit card, I can have them approved in an hour. Sometimes it takes a day if there's like a discrepancy in their credit report or an address discrepancy or something, but if they've got good credit and there's nothing wrong with it, it can be approved as soon as I submit it. for 20 grand or whatever they get approved for. And then usually I shoot you an email back saying, hey, congratulations, your client's approved for 20 grand, right? Good question. So the credit card's quick.
So do they have to go into like a branch to sign, or?
Good question, no.
Okay.
No,
You
I
just have
can,
to send them this and have them sign it and,
yeah, and so I've mostly just talked to them. They'll call me and say, hey, we want your 15-month no interest financing. I get all the details like this over the phone. Do I have your permission to pull your credit and get this application going? They say, yeah. And then I can call them back and say, you're approved for 20 grand. They never have to step into a key bank.
okay.
Good questions. Andrew?
This is I don't mean to cut you out of this loop or anything, and maybe, what's the difference between them going through you to get that credit card versus just going on your website and applying for the card on the website? Can't they apply for it right on the website?
Probably so, but then it's a longer process because they have to get a signature page mailed out to them. They have to
Okay.
sign it and mail it back. But so, yeah.
Well,
They-
I'm just wondering, is it like, does it help you out to have us send
Yes.
credit card people directly to you?
Yes.
It does, okay. Then,
So I have an annual credit card goal, I can't remember how many it is, but if I hit my annual credit card goal, I might make a small bonus.
sweet.
So thank you.
No, yeah, we're happy to send them. If it was all the same, then it wouldn't,
Yeah,
maybe look at it online, but I'll send them to you.
yeah, thank you, appreciate that.
Yeah, what's great with going with Jason though is if they have questions about longer term options, the solar side and how to structure that, so.
Thank you. I appreciate that. So yeah, any other questions about the 15-month no interest credit card payment structure I put on there? Most of your people are with good credit and good income, they're getting approved for 10 to 25. And usually that's enough to either float the tax credits or cover half the system. I've got a lot of your customers getting approved for 25 grand, and sometimes that's enough for most of the system.
Yep.
Quick question on that. Do you find them not getting what we need very often?
I've had a few, when you're in the lesser neighborhoods where they're making 65 grand and their house is worth 220, some of those people are getting approved for $7,500 on the credit card. And sometimes they need more than 7,500. So a lot of times I've been able to get them another card that's 6 months no interest. So I'll get them $7,500 on 15 months no interest. And then I've got another card that's 6 months no interest. I'll get them another 7,500. So a lot of your clients have gotten two different cards, so they can do 6 months, 15 months, and have 15,000 in one crack.
So you're working it to help us and help you.
Yeah, I'm trying to get all your deals done. I hope I've done good over the years.
Yeah.
So what would we do if the system's 20,000 and they're only approved for total of 15?
Great question. So let's get into the other products now, so this is the credit card is the most simple, easy, basic one for floating tax credits or coming up with half up front. But long-term financing is where most people do a home equity line with me. So my home equity line at KeyBank is the best one out there. And so for long-term financing, that's what we're talking about. So let's jump into that and make sure we can answer any questions we have there. So normally I can go to 85% the value of their home with no closing costs and give them super low payment options. Okay, I can go as low as interest only, so they can borrow 30 grand and have just this itty bitty little payment. Now, interest only,
Intermount wind and solar.
of course, interest only, the loan never goes anywhere, so most people don't want to pay that. They may want to do it a couple of times, but most people want to say, well, how about a 15-year payoff or a 10-year payoff? And I can quote them those payments, fixed rate or variable rate. Now, if they want interest only, it's got to be a variable rate. If they want a fixed rate because they sleep better at night with a fixed rate, I can give them a fixed rate, but then their payment is based on the term. So a 10-year term, their payment's going to be decently higher than their power bill.
If you do a fixed rate, is it only up to 10 years, or can you go longer?
I can go to 15. That's a good question. If I do it on a HELOC or a home equity line,
Yeah.
I have options to lock in the rate still, but my max term is 15 years. If they want to just not do a line, but just a home equity loan from the beginning, I can do a 20, 30. I can do those long-term terms with no closing costs and a fixed rate from the beginning, but then it's just not a line of credit. Line of credit, they can borrow, pay back, borrow, pay back. But if I give them a fixed rate term loan from the beginning on their home, I can do a 20 and 30-year term, but it's not a line of credit. Does that make sense?
Yeah, what do you find people are wanting?
Most people like the idea of the home equity line because it's flexible, it's got multiple payment options, and it can be locked in if they want to. And then it's something they can borrow, pay back, borrow, pay back. So most people, they love my home equity line because it's so flexible, it's got all the options. The only downside is if they want a longer fixed rate than 15 years, I don't have it on the equity line.
Do you have
Good questions.
a loan that has like an amortization period, so they can apply the tax credit and whatever is still due, it's gonna have the payment based on that?
A loan longer than the,
Well, like an amortization period to where, you know, it takes 12 months to amortize. So if they got their tax credits on a $20,000 system, tax credits, you know, $6,000 or whatever. So then all they have to owe on after that is 14,000, and so their payment would be based off of 14 instead of 20.
We,
You know what I mean?
we have other
Yeah.
lenders.
Well, but that's basically what a home equity line of credit is,
Yeah.
because it's a line of credit, the payment changes based on the amount you owe, right? Or the amount that you put on the card.
yeah,
Oh, okay.
So if you take out 25,000 and then get an $8,000 tax credit and put that back on the loan, your payment reduces based on, now you only owe
correct.
16,000.
Okay, perfect.
Because it's a line of credit, right?
And I'm somewhat familiar with your other, you know, your third-party financing options. And sometimes those are great and that's what they need and want, but I think you guys understand them well enough that those are more expensive than what I got.
Yeah.
So if you're trying to get your client the best deal and the least interest, some of your third-party financing where they're like 9% up front, but then they get 2.99 for 10 years or whatever, right? You've got multiple options out there, I know. But the 9% up front is never as good a deal as what I can get. But I trust you guys in your wisdom and judgment on which to pitch them and what clients need.
Well, we just run into, I mean, there's just sometimes where they don't even have the equity. They're not under 85% loan value on their home, and so we can't do a home equity line. So I mean, there's times where that's the only option, is
Yeah.
to go the other route. So it's not which one's better. The home equity
Thank
one's
you.
always better if they've got the ability to do it.
Since you mentioned that, let's jump into number 3. I've got a high LTV HELOC. So I can go up to 100%, but then there's a little bit higher rate and there's some closing costs. So for the people that are like, oh, I just bought this thing and I only put 10% down, I could still give them a home equity line with all the flexibility and the options. But if I go above the normal LTVs, then I've got $200 to $800 in closing costs is what I mentioned there, and rates are a little higher. Rates are from 16 to 13 because, you know, it's going to be a high LTV. I've done several of those for some of you guys in combination with a second. So sometimes they don't have a ton of equity. Maybe they only got 10 grand to keep them in my, you know, number 2 HELOC there. But I'd say, hey, I can do a second position HELOC and then a third position behind it to cover the rest. Like they need 17 grand and I can only get them 10 on this one. Well, I'll get them 7 on a third right behind it. I've done that for some of your clients. And then sometimes I'll do the number 4, which is just a home improvement loan, which is not collateralized, meaning we're not putting a lien on the home. And it's just basically a signature loan. We call it a home improvement loan. The downside of that one is it's a fixed rate term loan and sometimes the payment's higher than they're wanting to pay because 7-year term is a high payment. And so a lot of times we'll go home equity just to keep their payments lower.
And on something like that, I mean, what we would do is couple it with the 15-month no interest card on the tax credit, and then the home improvement loan.
Yep, you've done great at sending me those types where we're coupling the 15-month no interest with a home equity line or loan. And they're getting the benefits of both, and that helps me too.
Okay.
Yeah, super.
What are you seeing in the most common interest rate now on your HELOC? Because it says 4.5 on the low side, but
Good
what's pretty
question.
typical, it's 5?
I'm glad you asked that because yeah, rates have been going up. Last time I talked to you guys, I had rates at 3.99 on a second.
Yeah.
Nowadays, seconds are worse. So I mentioned 4.5. That's if it's a first position HELOC. If it's a second position HELOC, the best rate I got is 5.5.
So what do you mean by first and second position HELOC?
So someone's got a free and clear home and they want an equity line, I can put it in first position. It's their first mortgage, but it's a HELOC. Then I can get a better rates. If they already have a first mortgage and I give them one in second position, rates are a little higher. The best rate I got on a second position home equity line is 5.5, and that's if the line's higher than 100 grand. If I'm only giving them a $30,000 line, I'm probably a 6. So in your shoes, be careful quoting people rates because you don't know whether they're going to get a $100,000 line or a $30,000 line, and mine are tiered. So the higher limit they get, doesn't matter what they spend on it, but the higher limit they get, the better rate I can give them. So even people who only need 30 grand for your purposes, I can still get them if they got enough equity. I can get them a $150,000 HELOC, and they only use 30, but I got them a better rate because I got them a $150,000 HELOC. Makes
Does
sense?
that help with their debt to income? I mean, how does all that play into effect with credit and debt to income and all that with those?
Yeah, good question. So if they if I'm getting $150,000 HELOC and they're gonna qualify their debt to income ratio based on them maxing that $150,000 HELOC and the payment that would entail from maxing it. So it's harder for people to get a huge limit if their debt to income's tight. So sometimes I've had to, for you guys, they qualify for, well, they have enough equity to get a big one, but for income purposes, I might have to instead give them, instead of 150, I might have to give them 65 because that's all their income will qualify them for on DTI purposes. Does that answer your question?
I think so, yeah, so does it affect, if they wanna get future things, like if they wanna buy another house and they have, I guess what I'm asking is like, if you have an equity line of credit, and you have nothing under 30,000, but it's qualified at 150, like that's open to you.
Yeah.
Does that hurt getting another, maybe where they wanna buy a rental property or a second home or something?
Or
Does
No,
that
because,
affect-
oh, good question.
You know
So
what I'm
yeah, a
saying?
lot of times people will call me and they say, hey, will you send me my note on my home equity line? And I'll say, what's going on? What do you need it for? They say, oh, I'm trying to qualify for this mortgage on this rental property or second home or whatever. And they need to see my payment structure. Our note says, hey, you've got an interest-only payment option. So most of the times, those other lenders that are qualifying for whatever other purpose will take our note and see that there's an interest-only option and use that.
Oh, good. Okay.
So they're not gonna pretend that it's maxed either. If they only owe 20 and it's a line of 150, they're gonna say, oh, you owe 20 and your note says you've got an interest-only option, and they're gonna take that payment. So it's
Okay.
not killing people. It's not killing people to get a max equity line and then do things in the future. It's not hurting them.
Oh, good.
Good question.
Quick question on those interest rates.
Mhm.
I know you can't predict the future. Any idea if you think those are gonna keep going up like they are?
Yes, I believe
Okay.
they are going up.
Okay.
So the government said that prime is probably gonna go up 4 times this year. Prime is the major index that most credit cards are tied to and home equity lines are tied to. Likely those, right now, if you send me an equity line and I can get them a 6.5 on a second, a year from now, it might be 7.5. Rates are going up. So what I'm talking to your customers about is, hey, let's get this, borrow your 30,000 for your solar, and then let's lock it in on a fixed rate term within the equity line, because then you can sleep at night knowing your rate's set on that $30,000 solar panel system. I can lock in your rate. You can still have the available equity for future needs, but we've got your solar panels locked in on a fixed rate for 30 grand. So I'm having good conversations with your clients. Your clients are smart too. And I feel like I'm giving them their best options. I'm knowledgeable. I've been doing this for 10 years. And most of your clients come away loving me. Hopefully they're telling you that.
Are most of the clients asking for a fixed
Lately, yes.
just because of the market?
Yeah, so most of the people lately, they want the HELOC for its flexibility.
Yeah.
And then when I tell them there's a fixed rate option within the HELOC, they're saying, great, once we borrow, let's lock in the 30 that I'm gonna do for you for solar panels. Let's lock it in. I've been locking in 8 out of 10 lately.
So explain how that works. So they just have, does their interest rate go up, or they're able to lock it in at the rate they got? How does that?
So here's how it works with us. So home equity lines are variable by nature,
Yes.
variable rate. Then ours has an option, so once it's borrowed, so I tell your people this, I say, hey, I can't lock in your rate until you've actually borrowed it on this home equity line that we have. So we get it approved, there's 3 days right of rescission, then you guys come to them for money, we get them paid through the HELOC, and they pay you 30 grand. Once they've borrowed the 30 grand from our HELOC, then they can call me and say, what's today's fixed rate option? And I'll go and I'll see, oh, for you today, the fixed year option is on a 5-year term, it's this rate, on a 10-year term, it's this rate, and on a 15-year term, it's this rate. They choose their term, there's a $50 one-time fee when I lock in a fixed rate option, and I tell them that, and they say, yeah, for $50, let's lock in on that 15-year option. Once they lock in on that particular balance, it's done, and it's like a fixed rate payment monthly for the term. And then the rest of the equity line is still available. Does that make sense? And also, as they pay down, so each monthly payment pays down their fixed rate option. As it pays down, it becomes available on the equity side. Does that make sense?
So how do the interest rates compare? When you look at a variable rate, if you're saying average 6% right now,
That's your
if I go to
question.
lock in a $30,000 loan, I set it up at 6%. Am I getting 6% when I lock it in, or am I getting 8% when I lock it in?
Good question. Right now, the structure is, so let's say they get 6.5 on a variable. Right now, for your top 780 plus credit score, they're getting 4.64 on a 5-year, within the equity line. So they're getting way better to lock it in on a 5-year term. 10-year term though, right now is 4.89. And a 15-year term right now is 5.64.
So it's even better, so. that's
So it's
a no-
better
that's
for
a
people.
no-brainer. Why not?
Yeah, now this is if they're in 780
780
plus credit score.
Credit score.
That's why most people are locking in lately is their fixed rate right now is better than the variable rate. Now that might not always be the case. 6 months from now, I might be at 7.5 here and
Sure.
7.5 here. I don't know.
So what are those tax, or the credit score brackets? Is it, 780 and up, and then is it 700 to 780? Or is it 750 to 780?
Good question. So yeah, our tier 1 where I can get everything the best is 780 plus. From 780 to 750 is usually tier 2. Now it's not an exact score with us on tier 1 and tier 2 except for tier 1. Tier 1 is an exact score. It's got to be 780 plus. For tier 2 and 3, it's several factors involved with how much revolving usage and several things. But tier 2 and 3 are slightly worse rates, and it's usually 780 to 750 and 750 to 720 is tier 2 and 3. I usually, we're not your low credit qualifiers. If you got
Sure.
somebody 660, I probably can't get them done. 680 plus maybe, but with a worse rate.
Yeah.
But 680 plus is generally what I need to get your clients done. And most of your people have that. Like people buying solar have good credit. Yeah.
Sure.
Good question.
There's no early payment penalties or anything to do the fixed 15-year.
Good question. Let's talk about it. So home equity lines nowadays, they all have what's called a 3-year early closure penalty. Now, an early closure penalty, and it's small. It's the closing costs we pay to get it done. So if we pay $200 for an appraisal and $60 for title insurance, $260, we don't charge them any closing costs to get the deal done. But if they close our line of credit within 3 years, we'll recoup the $260 that we paid to get it done as an early closure penalty. Now that's different than a prepayment penalty. They could take one of these, lock it in, and then their dad dies, they get inheritance, they pay it off within a year. They could pay it off and just leave it open and not have the penalty, right? So as far as the closure penalty, they actually have to close the line.
Yeah.
So they could pay it to 0 to save themselves interest, no penalties. The only penalty comes if they close the line.
Same for the fixed rate, variable rate, it's all the same.
Same thing. Yeah, it's all the same.
But after 4 years, or after 3 years, there's no penalty at all.
Correct.
Cool.
Correct.
No.
Does that answer your question?
I wait for my tax.
We've gone over a lot.
What,
Go ahead.
what are the terms again on the variable home equity line? Like, what's the typical term that people set up their variable home equity lines on? Because we're always telling them, like in our, maybe I shouldn't say this, we usually give them numbers based on a 25-year home equity line for payment wise. Just like not fixed or not exact, but this is what it's gonna be close to, right?
Yeah.
So is that, I always wonder if I tell them that and then they go in and then you tell them that they can only get a 15-year term. And so the payment's much higher than what I told them it was gonna be.
I'm glad you asked that, because if I were to say there's one issue that I've had with your clients coming to me expecting something and getting something different, it's that occasionally one of your clients will call me and say, hey, I want my payments on this loan to be lower than my power bill. And that's not always easy because of that exact thing that you're mentioning, okay? So for them to get financed for the whole thing and have a payment lower than their power bill, it's pretty much gotta be a 25-year term or more. And so then if they're doing the credit card plus the equity line, then it's a different qualification and calculation. So here's my thoughts for you guys on that. And I don't know if that's your major sales pitch is.
That's everybody else's.
It's the industry's.
Yeah, and that's one thing I disagree with the industry on is solar panels are an investment. And there's nothing saying that an investment needs to have a lower payment than your electric bill, right? So I hope, and I know some of you guys have improved on that over the years, but yeah, if they call thinking that their payment on financing 30 grand is gonna be less than they're paying 120 bucks a month for their electric, it's tough to get to. Their only options are interest only or like a 25 to 30-year term loan. And so I have those conversations with your clients. They call me and I just say, hey, here's what I can do, here's what the payment would be, here's your options. It might not be the $110 electric bill, it might be 160 bucks, but you're on a 15-year term, fixed, You know, I work with them, I help them know their options. And then I do, some of them I've had conversations with of, hey, this is an investment that for you. Like, this is money that after 20 years, you'll have made substantial returns on your investment. But the investment's better the quicker you pay it off.
Jason, you have solar, right?
Yes, in fact, you guys did it
Yeah,
back in
that's-
December.
I think it's helpful for them to know that because you
Yeah.
understand solar and us and, yeah, I just thought they should probably know that.
I appreciate that, and I have talked a lot of your clients into it when they're on the fence. Because I've been like, hey, I got solar, I believe in the numbers, I believe in the investment. So everybody's got a different reason for solar, and you guys talk about this all day. My reasoning is investment strategy. You know, I just know that my 10 to 13 year break-even point, depending on whether rates rise or lower, I've got a 10 to 13 year break-even point. So for me, it's all about numbers. It's all about investments. I take your clients and I take a calculator and I break it down for them. And so, yeah, you got to find your client's motivation, whether it's payment or investment, and go that route. But be careful on payment, because I can't always beat their electric payment.
Quick question on that. So if they do a home equity line though, up front, their payment might be pretty high, but after they apply their tax credit, would bring their payment down to somewhere close to where their electric bill is.
Yeah,
Well,
exactly.
and Shauna, you maybe just explaining how a home equity line works as far as the initial interest only period, basically, and then where it converts into a fixed loan, right? Isn't that how they work? Or maybe the terms are wrong here, but
Yeah.
but typically on a home equity line, if they do a 25-year home equity line, and tell me if I'm wrong, the first 10 years might be a draw period, which means that they can draw and repay, draw and repay, draw and repay as much as they want. The interest rate is variable, or typically variable to start with, on that loan, but it's an interest-only payment during that draw period. So their minimum payment is probably much lower than what they should be paying, right?
Yeah.
Because they shouldn't just pay interest only, or they're gonna have it. They're never gonna be paying off principal. After that 10-year period, that loan converts to a 15-year 15-year fixed term loan, which means that they get a payment. They can't draw and repay anymore. It's just now it's a loan. So,
Let me give you our details on that. So we've got 15-year draw option.
okay,
And yeah, they get an interest-only payment option, but they can pay whatever they want.
sure.
And then after 15 years, we take away the interest-only and the draw option. And if there's still a balance after 15 years of draw option, whatever their balance is, we take and amortize over a 15-year stretch from there.
Yeah,
That
so-
never happens. Nobody hits their 15-year draw option without just wanting to redo it. So at 15 years, instead of taking the 15-year amortized payment, they'll be like, well, let's do another one. I like this home equity line thing, and just redo it for me.
But the point is their minimum payment on during that 15-year draw period is really low because it's an interest-only payment. But that'd be really, I mean, we never advise clients to make only that payment because they'd lose their shirt in interest down the road, right?
And I advise them on that too. I
Yeah.
say, we have an interest-only payment option, but that loan's not going away unless you pay extra. I said, you can pay whatever you want. You wanna pay off in 5 years, I'll tell you your 5-year payment. You wanna pay off in
Yeah.
10, I'll tell you your 10-year payment. But they've got flexibility.
So the thing is during that interest-only period, right, that draw period, it's a 15-year period. They're gonna get their tax credits back within the first year, 2 years, 3 years, potentially, depending on their tax liability. And they can continually put those lump sums back into that loan, and that will lower that payment, but ultimately they should be making a steady payment into principal to pay it off within that 10-year, 15-year period, or whatever they want.
That's why you guys are good at what you do. You understand it, you know it, you can advise people to be smart. I'm trying to do the same thing, I'm advising them to be smart. And then I even know I've looked at people's taxes for you guys to say, hey, it's gonna take you 3 years to get your tax credit. Cause sometimes with other companies, they're not teaching them that, hey, you can't get this all in 1 year, it depends on your liability. So I'm taking your client's tax returns and teaching them, hey, it's probably gonna take you 2 years or 3 years to get your full tax credits back. Most of your clients, it's 1. Yeah.
So we can refer people to you to look at that too, like they're looking at a home equity line, because usually it's their CPA or their accountant. I mean, most of the time when I'm with a family, I'll let them know they should check into that. Like I bring that up pretty heavy, because I don't want them to, well, I combo a lot of stuff, right? With the no interest credit card, we have to be very careful how to use the tool, because if they don't get it all back they're gonna have that big interest rate, right?
Yeah.
And does it back charge all the interest on the credit card or no? It doesn't?
Yeah, so our interest rate doesn't back charge, it's just whatever the
Whatever
balance
the-
is in 15 months, that's what they're gonna start paying.
Good first thing. Okay.
And there's no
Instead of the
fee.
city.
They're not paying a fee on the
They have a 1% payment.
1% payment, yeah. that's it.
Yeah.
So there's ups and downs.
So I guess my question is like, can we send them, will you look at that on when you do an extra work? But I guess they're looking at the home equity, you can look into that with them.
Yeah, I mean, I'm not a
A little bit.
CPA, but I'm pretty smart with taxes, and I'm not gonna give exacts either, so I'm gonna look at their taxes, I'm gonna say, last year, this was your tax liability, it was 12 grand.
Okay.
And you're looking to get back 30% of your system, it's more than 12 grand. You know, so I'll say, this is what you paid last year, I don't know how you're doing this year, but last year you paid 12 grand, and so you would only be able to, if your taxes were the same, you would only be able to take 12 grand on your tax credit this year.
Okay.
Yeah. It's not hard.
We
I
can
can
do
go for
that too.
Yeah.
If you, maybe.
Well, what's
train
hard
you.
though is that the whole tax law changed, right? And the
Yeah.
child tax credit's doubled now,
Right.
and you can get it where you can get it last year, and so
Yeah.
there's things that change like
Sure,
that.
yeah, I
where
gotcha.
That's what's scary about it now.
Yeah, and here's I should mention this, but yeah, the bad thing now is home equity lines in second position are no longer tax deductible.
Right.
So last time I came here and pitched it, that's one of the pitches is, hey, put it on your home equity lines, tax deductible. Now, starting in 2018, second position home equity lines no longer tax deductible. It's still the best deal for them because it's the best rate and the best payment structure,
Still, it's just,
but it's not tax deductible anymore.
yeah, so I mean, can a CPA like tell, I don't know, that's why I'm confused a little bit. I mean, you're not CPA, but like, with the new tax laws, they took out some things that made it better, something that made it worse, right? I mean,
Yeah.
I don't know. if
Yeah,
they're
it's still
able
gonna
to
end
tell.
up similar enough,
Will it?
similar enough that I can look at last year's tax return and say your liability was this, it's well less than your this, or your liability was this, it's way more than your that, and so you're gonna be fine. It's gonna
Okay.
be similar enough.
Okay,
I mean, most people making between 60 and 250 is what you're dealing with. And for most of them, the tax reform's not gonna dramatically change things.
good, okay.
It might change, some people are gonna save 6%, some people are gonna save 10%, some people are gonna pay 5% more, but that's not gonna dramatically change the numbers.
Okay, good, that's good.
Good question.
Thanks. Come on.
All right, any other questions? I know I've taken my allotted time here, but you guys have great questions and I appreciate your business. I hope you'll keep sending me business. You've got all my information on the bottom of this front form. I've given you some, and if you want my electronic versions of the credit card app and my electronic version of the home equity line app, I can shoot those to your emails.
Tell us the easiest way. I'm with a customer, I wanna get them a no interest credit card. Is it for me to call you and give all their information? Is it for me to email you, for you to call them? What's the best way for you to,
We've done plenty of it, and Brian sends me, Brian sometimes will call me with the client, and I'll just grab their information with the client right there over the phone. But that's before I've given you like the actual application. Now you've got the actual application. If they're ready to go and they wanna do it, you could put it in front of them, have them sign it, fill it out, say, I'll send this to Jason, and he'll be calling you to get your permission to pull credit. So probably easiest way, you're with a client and they're ready to do our 15-month no interest, slap an application in front of them, have them fill it out and email it to me. And then say, and Jason will be calling you to get your permission to pull credit.
so they need to fill out basically all of it.
So the one I put, the credit card form is the one that's stapled together in the back.
Uh-huh.
That's just if they want a credit card and they don't want to have me bothering them for a signature.
Okay,
The one that I've produced that's like the home equity lines and credit card application, if they fill that out, that's usually because they want a home equity, and I don't need a signature right away. But
okay,
for credit cards, I need a signature right away. So it's this back one that's stapled that they could fill out if they just want a credit card and they don't want me bothering them for a signature, they just want to sign this one. That's the quickest, easiest way.
So just the page 1 of the 3.
Yeah, and if there's a co-borrower, there's page 2 on that.
Does it help to have a co-borrower? Do you recommend it, or you go off a higher credit score for the?
We go off the higher credit score,
Okay.
but it just depends on debt to income ratio, right? So if he wants to leave the wife off, but wife makes 60 grand, it might be better to put her on because she makes 60 grand, so it depends.
Okay,
Yeah, and you guys know how that works.
she's a housewife, makes nothing but has a good score, you just take his income, like it doesn't
Yeah,
matter?
so that's just all
His score-
preference.
you take the best credit score and the total income.
Correct.
So if the income, if her credit score is better, then yeah, put her on.
okay.
Yeah, and they'll usually know what they want to do. And they usually know that Yeah, I can put her on, but she doesn't make any income, but I want her on so that if she needs to access the home equity line, she's on there and can access it. Most people I talk into doing joint just because it's always smarter that way. There's a couple people out there who don't wanna do joint because they want her credit unencumbered for this purpose or that and his. So everybody's got their own preferences and they'll tell you. Yeah, good question.
Are you working with any other solar companies?
You know what, you guys send me 90% of the solar business that I do. So I've got one other company that sends me an occasional deal here or there. But you guys have, over the 3 years, have given me 90% of my solar business that I do.
Gotcha. And then, not trying to put you on the spot, but kind of at the same time, you said I'm the best, KeyBank's the best. Can you touch on that? Why
Why me and
you
KeyBank?
or US Bank or any other bank they go to?
Yeah, so KeyBank generally will go to a higher LTV. Yeah, so KeyBank's 85%, and then we go to 90 if they make 10 grand or more and have, there's stipulations. There's no better home equity out there than this. That's why I came to KeyBank 10 years ago, was KeyBank had the best home equity line, it still is. And so, hands down, I've got no qualms about saying they're gonna get a better home equity line with KeyBank. And then me personally, I think I'm really good at what I do. I've been doing it 10 years. I can give you statistics of me leading numbers in the state of Utah but I'm good at what I do. Yeah, thanks. Question?
What I get a lot from customers is they wanna go check with their credit union. And I know credit unions, from what I found, don't really do very good home equity lines. But what would you say to that? Like, what should I tell my customer to get them to scrap the credit union and just go with you? Because I honestly, that's probably my number one thing is they like, well, I wanna check with my credit union first. And,
Good question, and here, I'll give you the realities, and then you guys are salespeople and will know how to pitch them. The realities are this: most credit unions, the payment structure is too high. They don't have an interest-only payment structure. So they'll go to 80% home equity line, and then their payment structure is 1.5% of the balance. So if they're borrowing 30 grand for solar, what's 1.5% of the balance? $450.
Wow.
So they get a $30,000 home equity line from their credit union, and they've got a $450 payment. That's most credit unions, that's the general structure. Now, sometimes there's teaser rates. Sometimes a credit union will offer, we'll give you prime -1 for 6 months. Or there's teaser rates out there, and sometimes credit unions will do that, and sometimes that's great for the client. But just overall, so you can just feel good about saying, in our experience with all the industries and the financing, KeyBank has the best equity line out there with the best payment structure and flexibility. So while you love your credit union, it may be great, it may be perfect for you, KeyBank does have the best options, you may want to call them.
I always tell people, like, look, I've had homeowners look at 5 or 6 different options, financing options, they always come back to KeyBank. Because they've got the best home equity line.
Yeah. Perfect. Thank you.
I worked with another guy at KeyBank, Phil. Who's Phil?
Phil's in Salt Lake, he manages a branch downtown.
Okay.
He's a nice guy.
It's been a long time.
Send him to
I just
me.
wondered. I will. Honestly, I love the fact that you have solar and you got solar from us. I didn't know that, Phil, I'm gonna delete his contact.
You guys you did fantastic on my solar, and I've talked to neighbors, and I'm impressed with you guys as a company, because when other people have come in and talked solar with me at the bank, they've always said, well, I got this quote from so-and-so, but then I got a quote from Intermountain, and Intermountain's quote beat them. Like, you guys have been impressive. When you did my solar, you've been impressive. Love working with you guys. And yeah, my solar panels look great on my house.
He's got a tile roof, right?
Yeah, I got a clay tile roof in Kaysville and those Richmond American homes. The reason they look great, so my roof's really tall. It's a 2-story, and it's not super pitched. It's more like this. So you can hardly see them. Like, you're driving down the street of my house, and you can maybe see the solar panels up on my house, but not really. But what you do see looks great. Yeah. Thank you so much.
Jason, thank you. Really
Yeah,
appreciate
appreciate
it.
it.
What's the best, just contact there at the bottom?
Yeah,
Now,
so
you mentioned calling you live if we have to. Is that just like an 8 to 5 at an appointment, or what are your kind of hours that you're?
yeah, I better stick with that. I know some of you have my cell phone number and have called me outside of business hours, but sometimes my wife's not happy about it. So But some of you have my cell phone number, no, it's a big deal to you all.
As soon as they have to borrow some.
So there's my work line, my work email.
So as long as
Sure, we
you
have my cell phone
have
number.
that base.
Yeah,
Thank you, I do, appreciate it.
It makes
Yeah,
sense.
let us know if you've got any questions on our end.
The
The biggest thing is if we're saying something we shouldn't be saying,
I was new.
keep us posted as well.
Things going good over the years.
Okay.
Other than that, keep my payment less than my electric bill, that's really the only tough one.
Yeah, we get that too.
It's, yeah, and you're right, there's just no comparison.
Gotta get into
It's
some of those
like
donuts, right?
investment to a power bill. It's not.
It's an investment.
You know, I lost a huge job once because of US Bank, and I will never use
Oh, yeah.
That's right, you did, didn't you?
it. I did.
Donuts, guys, you have a donut?
Have a couple.
Thank you, really appreciate that.
I don't know if you're still meeting or.
Nope, yeah, we are, but go,
Okay, yeah.
eat away, take.
Appreciate you guys.
Thank you.
I'll see you later. Yeah, nice to meet you guys.
Yeah, hey, and I'm gonna get a home equity line too, I know I've emailed you a couple times, I'm waiting on my taxes to get finished.
Okay, yeah, just when you're ready. Nice to meet you guys.
Oh, that would have been bad.
See ya.
I didn't just get the cheesy,
Anthony Bright,
lame one.
John Wilson.
Good stuff, yeah.
Super. Good luck, keep making some money out there.
Thank
you. See ya.
All right. John, do you live up in Logan? What number do you want?
And for your windows in the US Bank guys.
Oh, yeah, yeah,
Yeah,
that's right.
back when I first started at Home Depot, actually.
Just preference.
That's right, that's great.
Yeah, for like
I've
your
never
basement,
used
yeah,
him.
like little windows, and like a big living room window.
Again,
I got a good memory.
because I said, hey,
It's weird what I remember.
I have your cell phone number, can I give it a
That's
client,
crazy.
call you outside of 8 to 5 hours.
You say no.
And one time, he got really frustrated with a client, or a client, or a rep of ours, and even now he said no.
Hmm.
And I'm like, that's so weird to me. So I've never had a problem with US Bank, but
Yeah, man.
I've never used him, so I will.
I still send
Jason?
him his number. I sent him his number.
Cell phone number?
Say call him whenever.
That just blew me away.
Maybe it just doesn't answer till next day.
That would be the normal thing.
And that's probably just I think.
That's the only thing,
Expectation
and I
is
shouldn't be
set
hanging
with
on
the
that, it's
customer.
just weird. I feel like somebody that wants business would just
Maybe he's not paid enough to make it like interrupt his
evening.
life.
Yeah, he
Where
said his
we
wife
don't
wouldn't
care,
like
cause
it, so
maybe
maybe
get a little bit more to interrupt our life.
there's more to it than I do.
Sometimes just work ethic. There's this kid that I work with, you might know him, Andrew, I don't remember his last name, goes by Drew something. But he had a $70,000 sale up in Logan. And, so he's up in max bonus, which is 13%, so, 13% of 70 grand is pretty good. It was a roof and siding. So the roof got installed right away, but the homeowner wanted to make changes to the siding project. And they contacted him and he wouldn't contact them back to change the color and stuff. Next thing you know, they cancel their $30,000 job for the siding. Now the roof already got installed, but he got his front half, which was 4% of that 30,000 pulled out of his next check, and his 5% bonus pulled out of that.
Yeah.
So he ended up losing 9% of 30 grand just because he was being lazy.
Sounds about right.
Sounds normal.
Okay, so we're gonna roll into 2 minutes, then we'll roll into you presenting, is that cool?
Oh, yeah.
Glad you brought donuts. Guys, wait.
Okay, so, but 2 things quick, I want you to think about, so if I were to ask you, and I'm not, but rhetorically, how many hours you worked last week, specifically in solar work? Just to think that through. Did you work last week? Brian, that's gonna be tough.
How's that?
How was your work ethic? Your work
I was here.
I
I was
didn't.
here. One day.
No, so I'm not gonna ask you that, but just think that in your mind, how many hours you literally worked last week. 10, 15, 40, 50, 60, whatever that was. Now, take into perspective how many hours you might have worked in October versus how much you're working here, and how many deals you close in October versus now. I know a different market, but it would almost make more sense if we're selling less to work more hours, rather than we're selling less, let's work less hours. But just a thought, now on that, so let's say, just throwing it out there, let's say you worked 40 hours last week. Now let's break that down to a day. Let's just say you worked 8 hours on a Friday. I'll say people worked 8 hours on a Friday. Just divide that into 2 slots, we've got 8 hours. How many of those hours were effective hours of work? And how many of those were not effective? I mean, frankly, if we work 8 hours, but only 5 hours are effective, I mean, we don't need to work those 3 hours. Like, do something else with those 3 hours, go have fun or something, or take those 3 hours and make them effective. So just think of where you allotted your time, and I just, that helps me put it into perspective. Saturday, I got asked that question, and I was like, fair point. I've worked a lot of hours, but some of those aren't effective hours and vice versa. So just a thought there.
Quick question, and maybe people have advice, but I've found for the last 2 months, like I feel like I'm working, but none of it's effective.
Right, exactly.
So like, I don't know, I'm emailing, I'm calling freaking every day nonstop and getting nowhere. Like by the end of the day, I'm like, I just wasted 8 hours. So, and I think it's finally turned a little, like I'm getting, what I put in is starting to come about, but
Yeah.
I've felt that for like the last 6 weeks, 8 weeks is I'm working.